And now let's break down Michael Saylor's $5 million price prediction and his latest analysis on the 3 catalysts that will send the Bitcoin price to new all-time highs and his prediction of what he sees coming for 2024. I just transcribed this personally. It's never been shared before that I could find. So you're going to be getting the exclusive right here on Crypto News Alerts. So let's break this down, shall we? A massive shout out to Michael Saylor. Here's what he had to share. I think there are only 3 things relevant right now, and here are the 3 things. The halving is coming with 100% certainty. He is right, because the halving is scheduled to take place in April of 2024, roughly 6 months out. Now, as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses as well as their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that is coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, the fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. That's right. And at the end of the day, corporations only hold 2 assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset pari passu to a bond, then you'll see the reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all of these people holding real estate, holding commodities, holding gold, holding ETF and S&P indexes and the like. And if they start to reallocate, and they will, 1% and 2% and 5%, then you're going to have something that has never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Every other ETF in the world is on an asset that is not scarce. It's inflationary. Facts. And you can make more buildings, you can make more real estate, you can make more gold, you can make more commodities, you can make $4 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. FYI, that's how they control, manipulate the precious metal markets, fam. Now with Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to a spot ETF of gold, because gold is an inflationary asset, and you can't compare it to the ETFs on real estate or on bonds or on equity. You really have to say this is the first time we have ever plugged Wall Street into an asset that you cannot produce any more of. Preach. And so nobody knows what will happen, except that if you reason from first principles, you know that it has got to actually perform better than all the other asset ETFs, because the underlying fundamentals are just better. But let me lay out 3 possible ways to invest into Bitcoin. One, if you buy Bitcoin, the underlying asset. The second, if you buy the spot ETF. And the third is you buy MicroStrategy. Okay, we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put in place parallel custody, compliance, compensation control systems. So that's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You'll be getting 1-to-1 correlation. So for $1 million you put in, you're getting $1 million worth of Bitcoin. What's the positive? It's marginal. It's good collateral. I can buy in a second, no money down, and I don't need to build parallel custody control compensation systems. So all my problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. Okay, so if I charge you 1% per year over the course of 20 years or over the course of your lifetime, it means that I take 20% of the money you invested at 1%. So there is a cost. 50 basis points means I get 10% of your money approximately. But having said all that, I would pay you 50 to 100 basis points in order to be plugged into the Wall Street, and it's not a problem. It is a lot better than the alternative, which is rebuild all their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you can think of a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call it an ETF because we are not a financial company, but we have $4.4 billion plus plus a Bitcoin and $2 billion plus of debt. So what we have done is we have levered the balance sheet with debt and cost us about 1.5% interest. So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we can do. An ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have $4.5 billion of Bitcoin, but we don't charge $45 million per year. So the real idea here is, what if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it. How many of you would like that offer, fam? Being able to borrow $1 billion at 0% interest and just buy all the Bitcoin you can with it? Score! Talk about winning. Let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's a 60% difference over the lifetime of your asset. So if you have $1 billion invested and you're getting a 2% yield, you're actually picking up $20 million a year instead of paying $10 million a year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage and stock, the benefit accrues to the common stock shareholders, because I went and I borrowed $2.2 billion at 1.5% interest and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year? Well, let's say it's 15% a year. Then we're scraping 14% positive real yield off of the debt. And so that would be 14% of $1 billion or more, which is actually 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders. You see, this is the benefit of being an operating company. We can every quarter choose what to do. So some quarters we would issue junk bonds. Other quarters we would issue convertible bonds. Other quarters we sell the equity. Other quarters we would just use our own cash. So the answer is, there is always going to be a good market and there is always going to be a bad market. There are things you should do and there are things you shouldn't do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, then you should basically correlate one-to-one with Bitcoin after you pay the fee. Then you buy the spot ETF. But if you wanted to actually try to outperform Bitcoin like MicroStrategy's outperform Bitcoin, our performance over the course of 3 years is higher than Bitcoin's performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by creative financings. Like, for example, if our stock trades at a 30% premium to the underlying asset and we sell $1 billion of equity, we actually captured $300 million of accretion to our shareholders. And also, he also goes on to share that, first of all, Bitcoin is going to go up by a factor of 10, whether they can fix any of this stuff. It is going to be a grind up by a factor of 10 just because gold is broken, and Bitcoin is going to replace gold. And now everybody in the universe knows they need a non-sovereign store value in the form of a bearer instrument. For the last year, people said inflation may be coming. We are not sure. Now the mainstream narrative has flipped. Inflation is here. You need the inflation hedge. So it is going to grind up to replace gold. It'll go to $500,000 per Bitcoin, regardless of whether they fix these things. Here are the 3 things that are massive catalysts that caused an acceleration. And those 3 things don't take us to 500,000 per Bitcoin. They take us to $5 million per coin. Those 3 things are what I just previously mentioned. Number 1, the spot ETF, where someone can go ahead and buy 100 million worth of Bitcoin via an ETF security. I think that's one. And number 2, your bank is going to custody it for you so you can lend against it. And number 3, I can mark it up or down on my balance sheet based upon its fair value. It'll be pari passu to the way I handle Apple stock, or at least that good. And if you have property with fair value accounting, by the way, it becomes pari passu to the way you handle treasury bonds on a treasury balance sheet. Treasuries are better than stocks because treasury is property, whereas a stock is a security, and you're capped out at 40% of your balance sheet on securities. So it would be a major breakthrough if you saw any of those 3 things. I'll end with this one observation I tweeted last week, and I believe it's very powerful. If the banks can hold the stuff on their balance sheet, then a whole new class of investors are going to buy it. People are going to put in $1 billion and multi-billion-dollar orders to buy it as a treasury asset. Nobody is going to sell Bitcoin because there is no reason to sell it if you can simply borrow against it. Makes a lot of sense, right? So you'll be borrowing against Bitcoin. Nobody is ever going to sell it. And then, as I joked, you won't be able to afford it. Well, you'll be able to afford it, but everyone gets Bitcoin at the price they deserve. breach. And when the banks normalize it and you can draw a $100 million credit line at 100 basis points from an FDIC insured bank, at that point, we're going to blow through the market cap of gold by a factor of 10, ultimately meaning he believes the Bitcoin market cap will hit $100 trillion, which is what, 200x from here, considering we're $500 billion today. Now, I think the best thing is those three things are likely to happen. I don't know if they happen in 36 months or 24 months or 12 months, but I'd be shocked if it's more than 36 months. And I hope it doesn't happen in 12 months, because my view is the longer it takes, the more progressive the grind, the more time I have to accumulate and buy more of it. So there you have it, fam. Let me know if you agree or disagree with the one and only Michael Saylor. Now, massive shout out to everyone in the live chat. Now it's time to do our live Q&A. If you gain value out of today's episode, the greatest compliment you can do, simply smash that like button and turn on all notifications. And if you're not already subscribed to the channel, smash that subscribe button.